Hi, I'm Nadia.
And I'm Nicole. Welcome to the Wealth Twins channel.
Today we're going to tell you about the best types of investments you can have in your Roth IRA account, why we consider them the best, and how you can buy these investments now.
If your goal is just to have enough money saved for retirement, or if you want to learn how to become a tax-free millionaire, this video will help you reach your financial goals.
So hit that like button and let's get started.
Now, a Roth IRA offers a great way to save for retirement and grow your money tax-free. But there are yearly limits to the amount of money you can put into your account. Therefore, you should choose your investment wisely in order to get the best out of them and achieve your goals.
When it comes to deciding what investments to hold in your Roth IRA account, the two most important things you should focus on are performance and fees.
So we're going to get straight to the point with this video and tell you that the best investments when you can have in your Roth IRA account are high quality index funds and passively managed ETFs. It's simple as that.
Simple as that. There's no need to make things more complicated. Now, index funds and passive ETFs offer a low-cost way to get diversification, dividend payments, and provide performances that match the market returns.
Index funds are a type of mutual fund. A mutual fund is a group of investors who combine their money to buy baskets of securities related to a certain industry, theme, or objective. The reason why some mutual funds are referred to as index funds has to do with the way the fund is managed.
Yeah. Mutual funds are actively managed. Index funds are passively managed. Actively managed means that there are professional money managers who are paid a fee to buy and sell securities that the fund holds in order to make a profit and beat the benchmark that the fund is based on. An index fund, which is passively managed, only uses money managers to set up the fund to try to match the returns of the index fund it's benchmarked against.
Now, an ETF is an exchange traded fund and it's also a basket of securities sold in a way that an investor can buy it just like they would a stock in the stock market, okay? Yep. Now, ETFs can be actively managed or they can be passively managed.
Yeah. Some may think that if your goal is to become a tax-free millionaire, then you need to have riskier investments like single stocks in your Roth IRA, but that's not true.
You can definitely choose to have single stocks in your Roth IRA account, but single stocks can fluctuate a lot and cause you anxiety. And on top of that, you would have to buy a lot of single stocks and spend a lot more money to get the level of diversification that index funds and ETFs can offer with just one security.
A lot more. Adding on to that, if you're just playing the buy low, sell high game without intentionally deciding to buy stocks that also provide a dividend, you're playing a very risky game with your retirement.
Tell them, Nadia, tell them.
No stock is guaranteed to perform well, so it's better to invest in safer securities in an account used for retirement. The real money from a Roth IRA is made through compounding and continued contributions, not these big wins that you're knocking out the park.
Don't make the mistake, guys, and get caught out looking for short-term trends and lose out on long-term returns, all right? If you choose to have single stocks in your Roth IRA, make sure they don't represent a large percentage of your portfolio's assets.
Yeah. Do you guys agree that it's better to have your gains in your Roth IRA be slow and steady rather than trying to find a big win with the stock and knock it out of the park? Type yes or no. Let us know in the comments. We would love to hear what you guys think.
Now, although there are times when actively managed mutual funds and actively managed ETFs perform well, over a long period of time, it is hard for them to outperform their benchmarks.
Yeah, what's more is that you pay higher fees as an investor. Fees leave less money for you to invest in the market to reach your financial goals. Even small fees add up and can make a huge difference in the amount of money you make in the market.
Really, for example, guys, say you invested $5,000 a year for 40 years and received a 5% return on your investment.
Okay.
You would actually end up with a portfolio worth about $604,000. However, if you just take 1% off for fees, that portfolio now generating a return of 4% actually now has a value of only $475,000. That 1% of fees actually ends up costing over $100,000.
That is a lot of money for 1% of fees, okay? Now, when it comes to getting access to high-quality index funds and ETFs, your options rely on the brokerage company that you open your Roth IRA with,
True.
okay? When it comes to choosing a brokerage company for your Roth IRA, you want a broker that has a lot of investment options available and one that doesn't charge a lot of unnecessary custodial fees.
Now, we suggest setting up a Roth IRA with a broker such as Vanguard, Fidelity, or Charles Schwab. Each one of these companies and brokers have a lot of low-cost, well-performing index funds such as Vanguard's VTSAX, Fidelity's FSKAX, and ETFs such as Charles Schwab's SCHD to choose from, and each one of these companies, I'm telling you, have made it a point to make their business lower the overall fees that they charge their customers.
Yeah, if you're interested in learning more about the index funds and ETFs we mentioned in this video, take a look at our index fund playlist that we have linked at the end of this.
Now, when it comes to a strategy for your Roth IRA, the first thing you want to do is make sure that you are maxing out your contributions.
Yeah.
As of now, the yearly limit that you can contribute to a Roth IRA on a yearly basis is $6,000 if you're under the age of 50.
Yeah.
It's $7,000 if you're older than that.
Yeah, they're giving you a way to catch up if you're over 50.
Mm-hmm.
You also want to start Roth IRA investments early. There are 2 reasons why this is a good thing to do. The younger you start, the higher the likelihood that you will be in a lower tax bracket.
Mm-hmm.
Since Roth IRAs are funded with after-tax dollars and the money then grows tax-free, it makes a good sense to pay the taxes when you're in a lower tax bracket rather than waiting until you're older and you're more advanced in your career and your income tax rate increases.
Now, the second reason why is the magic of compounding. The more years you have your money working for you in the market, the longer price appreciation and the reinvestments of dividends has the chance to substantially grow your investments.
Yeah. Also, we just want to point out, invest all the money you have in your Roth IRA account. The money that you put in your account is just cash and will not be invested for you. If you do not set up a system to intentionally invest the money in your Roth IRA will be nothing more than a savings account for you.
Guys, you might think this is simple, but it has happened to many people, so don't let it happen to you. Invest the money you put in that account. Now, if you consistently put the yearly max into your Roth IRA account, invest in high-quality index funds and passive ETFs, avoid unnecessary fees, reinvest your dividends, and keep your money in your Roth IRA account as long as you can, you have the best chance of creating a great nest egg for your financial goals.
Yeah. If you would like to learn more about how we like to invest, check out the description section of this video and the videos that we linked at the end.
If you found any value in this video, please show these twins some love, subscribe to the channel, and share this video with someone you care about.
See you guys in the next video.